7, right? We're going to try. Well, it's 1:30 in the morning, freaking crazy. I'm watching McLeod, or I just watched Donnie Brasco again, but I was teaching till about midnight, and I had this video that I did. I worked with an analyst class, a couple of them, and they asked me to do a high level review of options on a chart. So we did that the night before they took the test, and they said it was all super helpful. They see all the option stuff they need, not the matrix. We have the matrix. It's something different. So we're going to give it a shot. Stay to the end and take a screenshot, and maybe that's what you can print out and put on your wall. I did different colors, like I did green for bullish, red for bearish, and then other colors for just fun. Okay. Woo. Okay. So let's get into it. Let's see how we do. I'm going to turn the screen off so you don't miss anything. My video off. Hopefully that helps. Gets my ass out of there. Boom. There we go. That should make it a little bit more better. Good English. Okay. So here's the deal on this. So we're going to start with the first thing we're going to look at, right? Buy a call, right? See if we can get, I think you shouldn't have anything in front of you, I think. But so if you buy a call, right, it's buy one XYZ 50 call. That's a long call. You're bullish. It's for speculative, and the break even is strike plus premium. Pretty good. Remember, green is bullish, red is bearish. So then we go the next one down. Buy a put. It's a long put. That buy, own, hold, long all mean the same thing. It's bearish. And look, it's still speculative. You thought I was off kilter. And then it's strike minus premium. Okay. So buy an XYZ 50 put is a long put. It's bearish, strike minus. Buy a 50 call. It's a long call. It's bullish. It's speculative, and strike plus premium. Go to the next one. Sell a call. Ooh, naked. Oh, we wonder where that's going to go. So selling a 50 call is like shorting or writing a call. It's bearish, and you do it straight plus premium. And then we go to the next one. And remember, red is bearish, so it's bearish. Oh, naked, uncovered. That's what it means when you sell an option by itself. It's naked or uncovered. So we're going to sell an XYZ 50 put. It's short, write a put. It's bullish. You're doing it for income, and you do strike minus premium. So let's go over this again. So these these are for speculation. It's white, so you're not going to see it. So I'm not going to even bother anymore. These are for speculative when you're buying options, and these are for income. Whenever you sell an option, it's for income. That's the only reason. So let's jump down a little bit farther. Let's go to the hedging. Okay. If you're long stock and long a put, that's a protective. Or if it's done on the same day, it's a marry put. You're still bullish because the stock rules. And HIP, in my world, HIP means hedge, insure, protect. So if you buy stock and then you buy an option, buy a put, you're doing it for HIP. HIP, hedge, insure, protect. So I always say buyers are HIP. And since it's buy and buy, it's going to be stock plus premium for the break even. Super easy. Next hedge, long stock, short a call. That's a covered call. Why you do? It's bullish because you own the stock. Maybe even neutral if you sell it at this. The strike is the same place you bought stock, whatever. You're doing it for income. The only reason you ever sell options is for income. And this is a covered call. Okay. How do you do break even? It's going to be the stock minus the premium. Remember, I put stock in big letters to remind you it's not the strike price, it's the stock. And always remember, stock is cool, stock is it, stock is everything. Okay. Stock is king, stock is everything. Now, those are two of the hedging ones. But remember, I do a covered call for income. Next, short stock, long call. That's a protective call. Now, since I'm short stock, I'm bearish. See, it's red. Okay. And I'm doing it for HIP, a hedge insurance protection. Again, HIP, hedge insurance protection. Buyers are HIP. So when you buy an option with a stock position, you're doing it for HIP. Buyers are HIP. Hey, HIP, who cool. It's for hedge insurance and protection. And again, since it's a buy and a sell, it's stock minus premium. Super duper easy for break even. And these will answer a bunch of questions on the exam. So if you're short stock, short a put, to sell and a sell, well, since you're selling an option, it's a covered put. So let's see this for a second. So if you sell an option by itself, it's naked or uncovered, like it's blowing in the wind, right? It's uncovered, it's naked. But if you have a stock position, so if you sell a call and you own stock, that's a covered call. If you're short a put and you're short stock, that's a covered put. I like that. I think we're on the same page. So if I short stock, short a put, it's covered put. It's bearish, maybe even neutral if I sell it at the strike, the same place I shorted it, and I did it for income, and it's stock plus premium. Why? Because it's a buy and a buy. So remember, the same you add, different you subtract for break evens. Okay, that's hedging. Let's move on down. Now we're going to the straddle world. I'll do both at the same time. I know, screw it. We'll do both. Okay. Now, long call, long put, that's a long straddle. Okay, long call, long put, that's a long straddle. Because how do you know it's long? Because it's with the long. So if they say the word buy, own, hold, long, and you see two of them, it's a long straddle. And what do? You do it for volatility. See, there's no color here because it's not really bullish or bearish. You're looking for volatility as 2 break-even points. I could probably even write that in there. Now, look what I did here. When you see 2 options, you have to do something like that. Right? So if you see 2 options, right here, 2 options, you have to do something with the premiums. Since it's a buy and a buy, you're going to add the premiums. And then you do the call plus the total premiums, and then you do the put minus the total premiums. So if it's 4 and 2, you add them up, that's 6. It's going to be the strike plus 4 and the put strike minus 4. So this is so these are the straddles. A long call, long put, it's a long straddle. We want volatility. There's 2 break evens, 1 up, 1 down. And then on a short, then we have a short straddle, which again is a short call, short a put. So remember something, we name things for what they are. So a straddle is either long or short. And why is that? Well, because it's either long and you bought both, or you're short because you sold both. Pretty straightforward. Moving on in, we're going to keep moving. Spreads. Okay, here we go. So it's a long call, short call. Now, I put the heart near the dominant one, right? So the dominant one is the one that drives the spread. So that's why I have the heart next to it. So in this case, long call, short call. If the dominant call, if the buy call is a dominant, then these things follow. But let's get into this for a second. How do I know if a call is dominant? Well, the lower strike call is always a dominant. Okay, so if you have a 35 and a 40 call, the 35 is always dominant on the calls and the longer month. So if it's a longer month, it's always dominant. And on the put side, it's always the higher put or the longer month. So it's always the longer month, the farther away. So it's August right now.
Oh, are they really?
It's still almost September. My anniversary is in 2 days. I still haven't bought anything.
I said something to her. How do you have so much room in your house?
I am. It's right now. Would I rather have an option that lasts until October or December? I'd much rather December. So that's why it's more expensive. It's the dominant. So that's the 2 ways. So I'm just showing you not how to find the dominant, but if you get the dominant. By the way, if they give you the premium, don't fight it. The bigger premium is always the dominant. Always. The lower call or the higher put or the longer month. Those are the rules. Unless they give you premium, and then it's whatever they say it is. Now, if this is a long call spread, so it's called a debit spread. If you see the word long, own, hold, the dominant tells you since the dominant is a buy means debit. So this is a debit spread. And since the buy call is a dominant, it's bullish. Since it's a debit, you want it to widen exercise. Remember, dead wives can't nag. Okay. So debit, widen, exercise. And when you do the break even, you subtract the 2 premiums from each other, and then you add it to the lower strike price. That's what it is. Again, when it's a call spread, you add to the lower every time. Okay. And it's green because it's bullish. Let's go to the next one. Long call, short call. Well, it sounds familiar. But the dominant is the short call. So the short call is either the lower strike or the longer month. Since the short call is the dominant, that's a sell. Short means sell. Sell means credit. So this is a credit spread, and we're bearish, and we want it to narrow. We want it to expire. That means remember, when I say widen or narrow, we want the premiums to either get farther apart or closer together. So that's what narrow or widen means. And expire means I would love it if both options expired, because remember, I have money in my pocket. So I want it to stay that. I want the money to stay. So if it expires, I keep the money. And again, you subtract the premiums because it's a buy and a sell, and you still add to the lower strike. So in a call spread, you still add to the lower. Pretty straightforward. I try to look at these things like I teach the different way of methods. And look, and if you guys want to really have a really revolutionary way, way to look at options, just a different way. I kind of created a method that's the kind of way I think of them. I'm kind of nuts. So I kind of think of them about break even and everything. And it's really intuitive and it really works. Okay. So that's why I'm just saying, since we're in here, might as well make a pitch for you can buy my options. You can rent my options videos.
About that time. We going live with the Q&A and I'm counting it down. Lock in with me. 5, 4, 3, 2, 1, go. We are live right now. The questions, the answers,
Let's go, baby. Done, baby. How's everyone doing? It is Happy Tuesday, everyone. We are doing well. Okay. Hold on. I like to. I guess I'm at top. Okay, good. Okay, now, okay. Hope everyone's doing well. Happy Tuesday. We're going to go right into it. We'll see what happens and we'll get going from there. Couple quick things. I said we're going into it and I lied. Okay. Couple quick things. That option stuff, that option strategy guide is on the free end. You can watch that. If you want to watch the whole thing, that is in the It's one of the, if you just type in option strategy guide on my channel, you should be fine. You should see it. Okay. Moving along. Now, if you're looking for a thing, go look. If you're looking for, oh my God, I'm getting old. I am getting so old. I can't remember anything. If you're looking for a good supplement or a vendor, go check out Achievable. They're outstanding. Achievable is amazing. Okay. Achievable will teach us stuff better than anyone else. And then the other one is STC. They're really good. Okay. Let's get into this. Okay. Oh, look at this. Anyone have questions? Drop them in the chat. By the way, Sensei, I hope that the video helped you a little bit. If you're really having trouble with options, join the membership. It's like $20 a month, and it'll change your life. You'll cry after like an hour or two. You're like, oh my God, it's so easy. Okay. Catherine put a question in. Anyone else want to put a question in? Let's do it. Okay. Mr. Nice Guy. That is outstanding. I love it. I love it, love it, love it, love it, love it. I'm so happy for you.
Yo, check it, pass that SIE like a champ, understand? Let me tell you how it went down. Hit the books like a record, kept it spinning all night. Highlighters in my pocket in a...
Boom, baby. I love it. Now, I ask, it's the same thing I ask everyone. Were there any, I don't need to know what's on it, but was there anything surprising on it? Was there anything surprising? Okay. Past the 7 this morning, on to the 66, baby. I love it. How great. Take a day off, enjoy the run. Please take a day off and enjoy it. You really got it. Good stuff. Okay. Now, Sensei, so what are you struggling with options? One, I have a thing that'll help you. I have a whole playlist. It'll blow your mind. If you're taking the SIE, don't worry about it too much. If you're taking the 7, it is a big deal. Okay. So again, if you're taking the 7, you got to know them. If you are taking just the SIE, okay. If you're taking the SIE, just know the basics. Don't worry about it too much. It's there, but it won't be the thing that kills you. Okay. Okay. Lacey, I'm sure you're gone, but you're going to nail this thing. As I tell everyone, get the hell off my live. If you are taking the test tomorrow, get off my live. I don't want you on here. Good stuff. Okay.
She's been studying since 6 a.m. Or
I hope 6. I hope. I mean
6 p.m.
Yeah, but it was only 2 hours. It's not that much, right? But hopefully she's done.
Yeah.
I'm not a fan. Like, you should, if you're taking this test tomorrow, you shouldn't be on here. You should be sleeping, going over custom count, stuff like that. Now remember, tonight is FINRA night. It is only SIE 6, 7, 24, 99, 57, all that stuff. Okay. 79, even if you need it. We'll get into that. Okay. Okay. Explanation of debt coverage ratio. Okay. So let me give a little background. So this is for revenue bonds. Funny. This is for revenue bonds. Okay. So revenue bonds are for municipal securities that are issued to pay for stuff that costs money. So a geo bond is for stuff that's free, so that it's paid with taxes. So they don't care about how much money they're bringing because they're not bringing in money. So they're what they call non-self-supporting. Okay. So revenue bonds are self-supporting. You have to do a feasibility study before you do it to make sure people are going to use it. You have to get a legal opinion by bond counsel to make sure that it's legal to issue. They're going to look at whether it's tax-free, who owes the money, is there insurance, stuff like that, but not credit rating and not suitability. Now, the question comes out, the debt coverage ratio is like, how much interest in income do we have coming in versus what we pay out in debt coverage, debt service. Debt service is how much we pay in interest and principal each year. So the question is, we're figuring out debt coverage ratio is how much money we're bringing in versus how much we have to pay out. That's really, it's how much we bring in versus how much we pay out. That's a debt coverage ratio. You want over, obviously there's a number, but maybe 2 or 3 times, but you want to make sure that the money coming in is more than the money going out. That's normal. That's a debt coverage ratio. Now, they don't really go heavy into the gross versus net revenue, but I'm going to talk about it because they do bring it up as a thing. Now, if we use what they call gross revenue, they're using the top line number, meaning all of the revenue comes in from a project is right there. That's gross. So if they're using gross revenue pledge, they're comparing that number to the debt service, and that's going to give you a nice high number. If they do net revenue pledge, They're doing the gross minus all the operating costs like rent, salaries, all the things to run the company, run the revenue bond. That's all going to come out of it. And what's left over is net. So if you do gross revenue pledge, you're going to have a much higher number than if you do net revenue pledge. Because let's say you have $100,000 in interest and principal payments, okay? And you bring in your grosses $1 million. So you're going to do $1 million divided by 100. That's 10 times. That's more than enough, okay? However, if your operating expenses are like 400 grand, you now go $1 million minus the 400. That leaves you 600 grand. So now you have 600,000 divided by 100,000. You only have a multiple of 6. Yeah, La Rosa absolutely thinks he's funny. Okay, but we just kind of let him think that way. We don't challenge him on that because you don't want to challenge certain animals. You don't want to challenge; they'll just go crazy at you. So, so net revenue is after you take out all the operating expenses. So that's 600 divided by 100, 6 times. That's a debt coverage ratio. Catherine, hope that helps a little bit. Okay. Can I explain DERP? Yep. Okay. So if we have now, I lost my black marker. I'm sure I'll probably find all my markers in one spot at some point. I think, yeah, I'm pretty sure I lost it. The black marker works better. Wait, nope, that's not it. Checking out everywhere. Any of you guys see it? Okay, no. So let's say we have Can we take the joke as long as possible? Okay, here we go. So we have DERP. Now, technically, these are the same day. So when you announce a dividend, that's called the declaration. Remember, Lucy said 6 a.m. She is on. Listen, Lucy, I love it. You need to stop. Okay, you're done. Get off of here. I'm so happy you're going to pass. Listen to me. If you're still on here, hold on. I do want to give you something here. Still on here. You got to go out with a bang, right? Okay. Wow. I can't find it. Oh, maybe it's down here. Boom, baby. I know that's lame, but we're going to go with it anyway. Lauren, Lacey, you're going to nail it. Okay. Do you remember, Lacey, you're not old enough to remember if you ever saw Caddyshack. There was a famous actress in there. Her name was Lacey. Okay, now, I won't say her last name. No, DERP. So when you announce a dividend, okay, you're going to declare it. So the board declares it. Let's say it's, I don't know. We'll say, what's today's date? It's 2/17. So in 2/17, they declare the dividend, and they say anyone who's an owner of record on, we'll say, 2/25. It'll be farther up. Let's say 2/25. And let's say that's a Thursday. Okay. So you must be an owner of record by the record date. That means you have to settle by then. Now, so I hope we're okay with that. So now, DERP, declaration, record date. Now, the question is, when do you have to buy it by to get the dividend? You have to buy it the day before because settlement's T+1 now. It's going to be T+0 in a couple of years, but right now it's T+1. So we're going to go, you have to buy it by February 24th. If you buy it on February 24th, that's the cum date. I will not spell that. C-U-M. I'm not going to spell it. Now, so the X date is the day you buy it and you don't get the dividend. So if you buy it on 2/24, you settle on the 25th, you get the dividend. If you buy it on the 25th, you settle on the 26th, you do not get the dividend. I want you guys to imagine this. On the record day, at the end of the day, the transfer agent / the paying agent will sit there and look at all the names on the list, okay, of who owns the shares, and everyone who's on the list gets the dividend. Everyone who's not on the list does not get the dividend, okay? So the only way to get on the list is to have it settled by the end of the day. So at the end of the day, the transfer agent goes, oh, Lacey has it. Catherine has it. LGH has it. All these people have their names on it. They get the dividend. If you buy it on the record date or on the X day, you settle the next day. Your name does not go on until then. So we have DERP is declaration. Then X date, which is the day before, is the same day as a record date. Then we have payable date, which is the day they pay it. That could be like March 4th. Okay. Made it up. Okay. So whatever it is. So we have declaration, X and record are the same day. Then we have payable date. Now let's do a little mathy math. Okay. Let's actually show the picture. So we all agree that the record date is Thursday, the 25th. I don't know if it's the 25th, but let's say we have Tuesday, Wednesday, Thursday, Friday. Okay. I can't draw. So now Thursday is the record day. You must be an owner by the record day. So if you buy the bond, if you buy the shares on Tuesday, you settle on Wednesday, you get the dividend. If you buy it on Wednesday, you settle on Thursday, you get the dividend because it settles on Thursday. Okay. Actually, let me make this work here. Now, if you buy it on Thursday, when does it settle? Why, yes, it settles on Friday. So that's the X day. You don't get it. Now, if you buy it here, the buyer gets it. The one who sold it to you doesn't. Here, you buy it here, you get it. The seller does not. Here, since the buyer doesn't get it, the seller does. Because think, if you IHJ, if you sell the stock on Thursday, your name comes off the list on Friday. So you are getting the dividend. So here, buyer gets it, seller gets it, and going on, the seller gets it. The only way you can buy it on Thursday and get the dividend is if you buy it for what they call a cash or same-day settlement. Okay? Cash or same-day settlement. That's it. And guys, I see questions coming in. I love it. I will get to all of them. Okay, now, that's how it goes. Now, what's interesting, what do they do on the X day? What happens on the X day? If you buy the bond or the stock on the X day, you do not get the dividend. So they will drop the price of the stock by the amount of the dividend on the X day. Now, it doesn't mean it's going to trade there. It's just they drop the base price. So that's why you never tell a person to buy it before the X day to get the dividend, because it's not a real thing. Because if you buy it on the day before, why does this remind me later? If you buy it before the X day, you pay the price and get a dividend. If you buy it on the X day or after, you pay the lower price without the dividend. So there's really a zero-sum game. Boom. That's why you should never tell someone to buy it before the X day. That's called selling a dividend, and it's not good. It's an unethical practice. Okay. Now, date of 15 yet will be in. How many questions should? Okay. No, you should do one. You're 2 weeks out. You should probably shoot for a couple of days, do practice questions. And then when you're about 10 days out, just do one final a day. Now, if you're taking the SIE, maybe you can do 2 a day if you're home all day working. But if you're working, like if you're home all day studying, then you can maybe do 2 SIE. But only the SIE. The 7, you got to do 1 a day. So remember something. As Brian Marks said, he's a great thing. He said it should take you longer to review the test than to take the test. So if it takes you 2 hours to take it, it should take you 2 or 3 hours to review it, because you need to review all the questions.
Did you see the last comment?
What?
Did you see the last comment?
No.
YouTube is down.
Is it?
And I just checked it. Yeah.
Is it really?
Yeah.
Huh. So I'm talking to no one?
I don't know.
Okay. Interesting. How did that? So maybe I'm on LinkedIn. I don't know. Is anyone on here like from LinkedIn or Facebook? Okay. Well, somebody just posted
this. I guess Kyle's on X, and
okay,
that's crazy.
Okay, but somebody just posted through YouTube. Oh, that's weird. Hold on. Let's see.
Yeah.
Let's see. What says it says no, it's not. I'm still here. They're just fucking with us.
No, I went onto YouTube. I'm having trouble myself.
Are you?
Yeah.
Well, it's on and off. Crazy. Okay, but somebody just posted through YouTube. I know, Kyle, you wouldn't lie to me. I'm kidding. Okay. Yeah, so maybe it's just up and down. Okay.
All right.
Well, I guess we're back. Welcome back, people. Okay, now. Okay. We're good. Now I got to see. Cool. I like how we're actually people here commenting. That's awesome. Okay. So now. No. So that's a great question here. Oh, these are good questions. I love these questions. Okay. Now. So again. So we're back here. Hoping you can get this. Okay. So 1 test a day. Review the shit out of it. Make sure you go over the right answers and the wrong answers. Okay. What would trigger a call? Okay. Hold on. Wait a second. Brian. Spaith, my man. Okay. Oh yeah. I would, if you can get another vendor, I would get STC as a whole, or if you just want questions, Kaplan. But you can even get Notman, but they're expensive. Okay, but yeah, I don't think trading consultants is enough for the 10, but it's on there. Okay, it's there. I mean, they'll help you. But listen to me, Brian. We got to celebrate this stuff, right? Okay, back to this. So the videos on the G rules, I love that video. They'll help you a ton. If you have training consultants, I would still get another vendor, maybe get STC or Notman or Kaplan. If you're going to get Kaplan, just get their questions. I don't love their questions, but it is new stuff to go at. If you can buy a whole vendor and it doesn't kill you, get STC. Okay. So back to this. Fin Minty. I like that. Like sounds like my last name. You know what's funny? I try to type FINRA in my it always goes to Finan. But if I try to type Finan, it always goes to FINRA. It's like it's taunting me. Okay, so now. So a callable bond, okay? What it's callable means a company can call it back. When would they call it? One, if they have extra money, but bigger one, if interest rates drop, okay? Because think about it, the issuer is paying out 8% as a bond, and rates drop to like 5 or 6. Why would they want to keep paying 8 when they can pay 5? So what they'll do is they'll issue a new bond for 5% and take that money and call you back. So that pretty much the conditions that trigger the call, or if their interest rates drop, or if it's a convertible bond, if the stock is trading above parity and you would normally convert, they may call the bond to do a forced conversion. So again, if rates drop, they call the bond to save money, like refinancing. The other one is if you have a convertible bond and the rates and the price and the market price goes up above the parity, they may force a conversion by buying it, by forcing the by issuing a call and making you pretty much convert your bond. That's it. Okay. Sure, I can do this. Okay. Good, Lacey. You better be gone. Okay. On the TV. I'm on TV. Okay. I'm like my TV. Hey, I'm on TV, Mom. Okay, here we go. Okay. Now, a little technical trading stuff. I should bring on the Einstein of Wall Street for this. Now, my buddy. Now, say we have here. I really wish I had my black marker because it shows up so much better. But I don't know. Who knows? My wife, if I ask my wife, so I'll have to hear the lecture about how I'm a mess. Okay. Do you know that having a messy desk is a sign of intelligence, right?
Is that right?
Based on that, I'm a fucking genius. Okay.
I was going to say, I've seen your desk before.
I am beyond. I mean, I do have a 160 IQ. But that doesn't really mean anything if you just become a vegetable and don't do anything. Okay. Oh, well, I don't have it. So I'll just use blood. Okay, here we go. Hopefully you can see this. So up here, say the stock's trading at 60 and a 50. Okay. Hopefully you can see that. So here's support. Stock's going down. It goes down. It bounces up. It goes up there. So support is here. It kind of bounces. It doesn't have to. But remember something. Technical trading is a self-fulfilling prophecy. Because if it gets down here, everyone knows it's going to go up. So they start buying. That's really what happens. Okay. And then when it gets up here, everyone goes, oh my God, it's near the resistance. Let's sell it. So it forces it down. So down here is called oversold. Only in Wall Street do we have anything called oversold. It's sold too much. It goes up. It goes up. And here it goes down. I always think it's weird. I don't know if it works, but I always think of, do you know Greek mythology at all?
A little bit.
You ever read about Icarus, the guy with the wings, the wax wings?
Too high to the sun.
I always think of this. Like he goes too high, he'll melt. He goes too low, he'll drown. So he has to stay right in the middle. That's my thing. So the whole point is it goes down here, it's oversold. It goes up, it's overbought. Now, what happens if it goes through? What is that called? A breakout. And what's going to happen? It's going to go to the next floor. Okay? What if it goes up here? It's going to break out. It's going to go to the next resistance or ceiling. Okay? So that's that. That's hanging up with the saucer stuff, but that's where we are. Okay? So that's technical trading isn't much deeper than that. It's a self-fulfilling prophecy because people see patterns and people love patterns. Okay? Now let's talk about a couple other things. So let's talk about a head and shoulders. That it's horrible, but that's a head. See, 2 shoulders and a head. So this is your upward trend, and this is the reverse. So this is either called bearish or an upward trend, because here's shorts and it goes down again. This is called a dead cat bounce, because when you throw a cat out of a building, it bounces once before it dies. So now it goes up, then down, and then up a little bit, and then down. That is a bearish, or here's the uptrend, a reversal of an uptrend. Okay, now that's a head and shoulders top. Now, what do we have? A head and shoulders bottom, right? Down, down, down. That's a bottom, okay? That's a head and shoulders bottom. So here's a downtrend, here's up. This will probably keep going up. So this is a reversal. Here's a downtrend, here's a reversal, and it's going to go up. That's the head and shoulder. And again, anything near resistance is overbought unless it breaks through, and then you're wrong. Okay, now, that's the thing. Technical trading works until you get screwed. Now, let's talk about a saucer. Here, what does this look like? The smile. That's a saucer. That's a regular saucer. Okay. That's bullish or a reversal of a downtrend. Here's my problem with the saucer pattern. You don't know you're out of it until you're out of it. Like they go, oh, here, that's where you should, but how the fuck do you know that it's a saucer until you're here? So you have to jump on the trend a little bit. So this is a regular saucer. It's a reversal of a downtrend. It's bullish. So who asked this, right? So Amina, I hope this is helping. Let me know. Then what's an inverted saucer? Upside down. Turn that frown upside down, right? Okay. So we have an inverted saucer that's bearish. Here's the uptrend. Here's a reversal. Okay. Remember, everything about technical trading, this is what I tell everyone. There's 2 things. There's fundamental and technical. Fundamental is no fun. F-U-N, it's fundamental, it's no fun. It's like looking at balance sheets and stuff like that. Technical is about trading, okay? Technical is about trading and all that stuff, okay? So it's all about trading and earning, trading momentum, support, resistance, overbought, oversold. All that stuff goes together. That's all about technical. Hope that helps. Okay. Amina, let me know if that helps. Okay. Now, DERP, no. So even with cash settlement, then your X day is the Friday after the record day. Okay. So cash settlement means you settle on the same day, which means you can buy it on the record day and still get the dividend. But if you buy it after the X day, if you buy it after the record day, you're not getting the dividend. So on a cash settlement, your X day is technically the day after. I don't like saying that, but it is what it is. On a regular way settlement, X is the same day as record day. Okay. Okay. Hope that helps. Okay. Okay. Are there any tips you remember when capital gains? Okay. Okay. Mac Mish, I love you too. Okay. So now. Okay. Now. And Trevor, I'll get you on. So I am about 10 minutes behind everyone. Okay. So now. Are there any tips to easily remember when capital gains? Okay, now, there's not easy tips, but we can talk about it. First of all, remember, there are 3 things that are capital gains. 1, a buy and a sell. 2, option expiration. And 3, mutual fund distribution of a capital gain. That's it. Those are the only 3 things that are capital gain. Or any pooled investment that distributes a capital gain, that's a capital gain. Everything else is ordinary income. So now, it's amazing how much I've been doing accretion and stuff. So if you buy a muni, the interest is ordinary income, but it's probably tax-free. Remember, everything other than those 3 things are income. Okay, let me see what you're asking specifically. Okay. I think you're talking about accretion and amortization, right? So don't worry about the ordinary income too much. But let's say, back to the board. Okay. I have to buy big-ass markers. Like the handy-dandy, like the Blue's Clues handy-dandy thing. Now, let's say you buy a bond for $950 and it's 10 years to maturity. So how much below par is it, Mac? Okay. Mac, how much below par is it? Well, that's $50 below par divided by the 10 years to maturity. That gives you $5. Okay. I have videos on this too. So if you look in the Series 7 math stuff, now that's $5. Now let's say 3 years later, you sell it for $9.90. Throw it out there. So what you're going to do is you're going to accrete. If it's an OID, you have to accrete. So you're going to take the $5 and add it to the price of the bond every year for 3 years. So now you go 950 plus 5 plus 5 plus 5. Our now price is 965. Now, if this is a muni bond, that $5 is not taxable. If it's a corporate or treasury, that $5 a year is taxable at ordinary income. Okay. And then what? So technically our new cost base is 965. We sold it at 990. So we pay tax on $25. That's a capital gain. So the difference between the cost basis and where we sold it is a capital gain. It helps a little bit. Okay. And you do the same thing. Find my Series 7 math videos. We can do it then. Okay. So now back to this. Okay. Remember something. You have to have a capital gain. You have to pretty much have a cost basis and a proceeds. You have to have a buy and a sell. Okay. So you have to have a buy at, whatever it is, and a sell. That's really what you have to have, both. Okay. Good stuff. Okay. 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 What's a good amount of time to study for the SIE? Okay. It depends. Okay. Really between 3 and 5 weeks. If you're working, 5 weeks. If you're studying all day long, 3 to 4. But Trevor, the first 2 weeks should be reading, adding knowledge as much as possible. As much as possible. Okay. Okay. Here we go. I love it. Everyone's working for me. Okay, good. Okay, here we go. Oh, it's delayed. I wonder if it's still delayed. Okay. Oh, see, look at that. Some people had some issues. Not everyone. Okay. Okay.
Yeah.
Okay. Sensei. Okay. Speculative strategies. Well, it's kind of like risky shit, right? So, I mean, what is it? Like speculative strategies are like buying calls by themselves, buying puts by themselves. The smaller the company, right? Growth stocks make me real, like emerging markets, right? So they're all crappy. They're all, Michelle, do you have some specific questions? We can talk about it, but about the fundamental, but don't worry too much. Okay. Now, okay. Anytime you're taking high risk, speculative penny stocks, emerging markets, not just international, emerging markets. That's like crappy little countries. I love the countries. I'm just saying that's the best way to explain them is crappy little countries. Okay. Buying calls, buying warrants, buy any kind of derivative on its own without a stock. The smaller the company, the more speculative it is. Kind of that. Okay. 100%, Kyle. Technical works doesn't. Like, that's why there's always a question. What do fundamentalists do? That sounds so bad. But what do fundamental analysis do? They will use a they say like, think about this. You may all hate Kramer, but what's the one stock Kramer's been talking about for the last 15 fucking years? Anybody know?
NVIDIA?
Yes. And for what? It was flat for such a long time, but fundamentally it was amazing. Then it took off. So the fundamentals may not always know when to buy. So a lot of times, fundamental analysts will use a technical trader to decide when to get in and out. So Kyle, I am not against you on that. Technical works until it doesn't, but a lot of times people use it to kind of get a better price on where to get in and out. I believe in technical on a shorter term basis, but I do believe looking at companies is the better way, and just buy and fucking hold. Okay. Okay. Now let's talk about fundamental a little bit. Okay. Now, look, Jeff.
No, I'm just looking down at something.
Yeah, he's reading.
I'm reading something.
I know. I can tell if he dozed off. Okay, so it's like head back. Okay, and back to this. Okay. Okay. Don't worry about it. Just keep reading your shit. Don't worry about Don't worry about fundamental too much. Know the big stuff, like what's on the income statement, what's on the cash flow, what's on the balance sheet, assets and liabilities, right? So think about this. Balance sheet is about the stuff, assets, liabilities, current assets, current liabilities, stuff like that. Cash flow is the money flow. Like cash is an asset. Cash flow is on the income statement. Okay. Profit margin is on the income statement, stuff like that. Operating costs probably in the income statement. All those things are in the income statement. They're not going to make you break it down too much. But there are like 3 or 4 formulas you probably should know how to do. PE ratio, price divided by earnings. Remember, then we're morons, so the ratios have to tell us price divided by earnings. That's what we call the multiple. A high PE ratio is a growth stock, low PE is a value. Earnings per share, earnings divided by outstanding shares. The only thing they may throw at you is fully diluted. So understand something. Earnings per share is earnings divided by all the shares. Okay? Now, if they say fully diluted, that also includes any kind of rights. Because remember, can we agree that if you buy rights, warrants, or convertibles, okay, if you exercise them, the company is going to issue more shares, okay? So if you exercise right, not calls or puts, rights, warrants, and convertibles, the company is going to issue more shares, which adds more shares to the outstanding. So if you ever hear the word, you're not going to have to do the math. If you hear primary earnings per share, it's regular earnings divided by outstanding. If you hear fully diluted, they're going to include those extra derivatives that turn into stock into the number of outstanding shares. P ratio, earnings per share, dividend payout ratio, easy. How much did we pay in dividends versus how much we earn? So dividend payout ratio, what we earn and how much we pay out. So if we have an annual dividend of $1 and our earnings per share of $5.50, 1 divided by 5 is 18%. So that's our dividend payout ratio. If you guys do 1 divided by 550, you'll get 18 or 18 and change. So the point is 1 divided by 550 is 18%. That's our dividend payout ratio. Of our earnings, how much do we pay out? Okay. Amina, I'm glad it helped. Okay. Now, we're at the end. Do I get to go home early? Okay. Guys, put some questions in here, baby. Okay. So I have 2 brutal exams. 2 of them. I have the GPT and then the other one. They're both amazing. Just keep doing whatever exams you have. Just 1 a day. Don't do more than 1 a day ever. Okay. Anything else I had to add? Okay. Oh, Tony, I totally skipped over you. I didn't want to do options. Okay. Okay. Now, okay. What is the difference? So, Tony, I'm only going to do this. What's a collar versus what's a spread and straddle? Now, God, if you want to do the whole math on it, go to $20 and you'll be like, an hour later, you'll be like, oh my God, I wish the entire test was options. Every single one of my people who buy the options membership, and it's literally $19 a month. Okay. And by the way, if you up it $5 more, we have a class that we meet every Sunday night. We have a class on Sunday, and everything you go up, you get more. If you go up another $25, you get the options class. If you another $50, we get another class on Tuesday nights. Like the class we had now, it was great. It was like maybe 12 people in there. Okay. It was awesome. More people sign up, but only 12 people show up usually. And then you also get to see the old recording if you can't make it, but it's a great group. Okay. We just had one from 7 to 7:50 right before the live. Okay. I used to do it after, but now I do it before. So let's say, Tony, okay. By the way, somebody last week gave a gift. So there's a guy, Sony Soprano. We've seen him before. He got a free SIE gift, which was really great. People can gift memberships. Okay, now, okay. Aisha, Aisha Muhammad. I will get that. Okay. Aisha Muhammad. It works. Okay, now, 1888. I hope that's not your birth year. Now, one quick thing. I do tutoring. I have 2 tutors that work for me. And then, so that's, if you go to series7exam.org or capadvantagetutoring.com or any of that, I have 80 million domains. It's either me or I have other tutors that can help you. If you just need help with a plan, Jeff is amazing. He does a study plan, a custom study plan. He figures out what you have, what you don't have, your work, schedule, all that stuff, and they come up with a plan and you keep up with them. You can speak with them for hours and hours and hours. Now, the other thing, no, I'm kidding. It's like 30 minutes, okay? 20 to 30 minutes, but it's great on the phone. Also, if you don't like my style, I'm too bombastic, okay? There's a guy, Michael Weiss, who runs the Series 7 exam Reddit, okay? It's r/Series 7 exam. Michael Weiss, he's at series7examtutor.com. He's really good. Now, that was my plug. Now, here we go. There's a custom study plan. There's the memberships. The membership is great. Think about it. If you pay $50 a month, that means you get my options plus 3 classes a week, 2 classes a week, which is that's like $8 a class. Where are you going to get a parking lot? That's literally a cup of coffee. Okay, here we go.
It's also something else. You got to figure out, do you do better one-on-one or do you enjoy the classroom environment and studying with other people?
For me, my pocketbook, I like the one-on-one better. Could you charge $250 an hour?
I'm not talking wallet.
I know. It pays my bills, baby. No, but these classes are great. It's a great, and here's a better one. I'm not trying to sell this thing. Do it or not. They are They all like I literally left them in the group. I think a lot of them are still doing. They do group sessions together.
Yeah.
They work together after. Like after the Tuesday one, I just shut it out, give it to Carly or somebody, and they stay on the class.
I just think the memberships can be nice. They're reasonably priced, and
Yes.
you get to
Reasonable.
break up the
They're
monotony
fucking
of
cheap.
studying.
Yeah. Okay. So it's not free. Somebody last week gifted a membership, gifted the $5 membership to someone. So you have the $5 one. All right. You'll be on there. You see Mike tomorrow. Or Miguel. Oh, Jonathan, stay on there. I'm going to get you. Before I do the straddles, I'll do that. It's not free. It's $5 a month for the. And they meet every Wednesday. And I was already told by her not to do Google Meet anymore. So when I have a student at the same time as the class, you can't do 2 Zooms at the same time. So I had Michael do Google Meet. She requested that I don't do Google Meet anymore because it's not as good. So I'm going to do Zoom from now on. Okay, Jonathan. In July, okay. That is outstanding. Jonathan, Ryan, I love it. I appreciate it so much. It makes me feel good. Even though you passed it last year, even though now I have a question for you. How's it going?
Yes.
How is it going? I mean, are you like, where is it? Where am I? Where is it? And I'll do the stop orders in a second. I'll get you on that one. I just wanted to get Jonathan out of the way. Okay. There it is. How you doing? Hopefully, I mean, it's been 6 months. Hopefully it's going well. Let me know how it's going. I always want to hear how people do after they pass. Okay.
Did you see what Nervous Platypus wrote?
Yeah, that's very funny. I agree. He's the best. Everyone understands something. D-Man, he's done. He just likes the shit so much. He comes in. Like I think I got him addicted. It's like a little taste of the powder, and he can't get away from it. Okay. Oh, just the insurance stuff. By the way, if you're doing insurance, go check out on YouTube Insurance Exam Queen. She's great. Little funny looking with the hair, but it's fine. I mean, she has hair. I'm jealous. I don't have hair, so I can't even dye it pink if I wanted to. But she's good. She'll help you a lot. Okay. Now Brianna and I am going to do the spreads and collars. I promise. We got to wait. Yeah. Our group this Sunday night is 7. If you want to pay for it, but if you don't, screw you. No. If you don't, go on Facebook. The thing going across the bottom. There's always groups starting in there. It's like 8,500 people in the group. I think I keep looking. It's like 4,500 active people. So there's always some people have passed already. They're just helping each other out. Just join it, and then you can ask for a group. But if you want to do the really good one, just pay the money. It's $25 a month. You'll get that. We meet on Sundays for an hour every Sunday, and it works out. Okay, it's pretty good. And a lot of them start their own study groups, and they're super friendly. So you think, oh, they're going to be cliquey? Not at all. They're always looking to add more people to the groups. Always. It's like the opposite of high school. Okay. Okay. Back to this. Okay. Where are you, my man? I'll do the stop orders in a second. Here we go. Okay. Okay. I'm not really going to do a lot in the calculation, Tony, because I want you to buy my shit, but a lot of free shit anyway. Now, so let's say this. So if you're long stock, this one I don't do behind the membership, so I can do this. So if you're long stock, what are the 2 options you can do? Well, I can buy a put for protection, or I can sell a call for income. I just did it on the video before, right? Now it sounds like I'm wasting time, but I'm not. If I'm long stock, I can buy a put for protection or sell a call for income. What if I do them both at the same time? That's a collar. I'm giving up my upside to pay for my downside. Now, what does that mean, Ken? Okay. So let's say I buy stock. Okay. Let's say I'm long 100 IBM at 50. What am I worried? I want it to go up, but I'm worried it's going to go down. So I'll buy a put. So I'll buy a 45 put at 3. Okay, buy a 45 put at 3. But I don't want to pay for that. So I'm also going to sell a 55 call at 3. Huh. So how much am I bringing in by selling the call? Why, yes, it's $3. And how much am I paying on the put? Why, yes, that's 3. So I literally pay zero money. So I now have protection. I can't lose too much, but I didn't pay for it. So that's what a collar is, okay? A collar is when you buy a put and you sell the call to pay for it. This is called the cashless collar, not an ashless chaps, cashless collar, okay? So this is a cashless collar. You're not paying any money. Now, when I was at LeBranch as a sales trader, what we had one guy, his entire job as a junior, his entire job was to look at our positions and find a profitable collar. So instead of just having a cashless one, we had customers who had like thousands of positions, and they go, okay, let's sell a 55 call for 4 and buy a put for 3. So this way we have a collar and we're getting money. So that's what a collar is, Tony. I hope that helps a little bit. Now, I'm going to do one quick thing. So now, if I buy a 50 call at 3, and I buy a 50 put at 2, how much did I spend? Why, yes, I spent $5. Right? Because I bought, I add them up. Now remember, write this down, Tony. Tony, my friend, write down straddles have 2 break even. I'm going to take the 3 and the 2, add them together, and then I go up to the, so I up from the call of 55 and 45. Okay, I go up to 55, down to 45. Those are my break evens. Now this is a long collar. I want it to go up or down. If it's a short straddle, my voice broke. I want it to stay inside the range. That's one thing. Okay, now, I'm not going to do heavy on the spreads, but I'm going to talk about one thing. If you buy a 50 call at 7 and sell a 60 call at 3, that's a spread. Buy and sell. Remember, bed spread, buy, sell. One of my students said that. I love that. Bed spread. That's how you know it's a spread. Bed spread, buy S. So now the question is, what do I do with the premiums? Why? Since it's a buy and a sell, I subtract. Remember, same you add, different you subtract. So my net premium is 4. Now, ask me this, Tony. Why did you break evens on a call? Why, yes, you do call. You do strike plus premium. So the break even on this is you're going to add to the 50. So my break even's 54. That's as far as I'm going. But my break even's 54. If this is a put spread, how did you break even on a put? You subtract. So you would subtract. If this was a put spread, a 50 put and a 60 put. If this was 5 and this was 2, the net is 3. I would subtract from the higher because it has to be in the middle. So my break even would be 57. I know I have hard behind writing, but deal with it. So if it's a put spread, you subtract from the higher. If it's a call, you add to the lower. Hope that helps a little bit. And go, if you like that, join the fucking membership. I gave you a little teaser. It's like OnlyFans for the 7. Okay, here we go. Only 7, we'll call it. Okay. Amina, we're going to get you through this. Okay. Again, the 2 brutal exams, I have a couple in there and just got to keep taking tests over and over again. Okay.
Do you see the last 3 comments regarding the memberships and everything? The last 2 there.
Okay.
Aisha and
let me go. Okay, yeah. Let me do that. Okay. Let me explain. So what is that? So 25 months is for the group classes and for the 7. Okay. Okay. Yeah. So, okay. So here's the way it goes, Aisha. It's $25 a month for the Series 7 class, no ops. You get the options videos, but not the options class. That's 6 o'clock every Sunday. If you bump it up to 50, get 6 FINRA at 6, options at 7 a month. And if you bump it up to 99, it's also we meet on Tuesdays. But you don't need to do that. If you just do the $24.99 one, you get this FINRA class and all my options videos. That's every Sunday, and you can watch the old videos. Okay. Now, and I usually will let the people in the FINRA class only watch the old videos of the options stuff. That's not a problem because you're not in there. Nobody really cares about that. Now the other thing is for Jeff. What's your cost?
My cost for what I do
Yeah, the study group.
for my custom study plan,
Yeah.
$50.
Okay. So right. So Aisha. So that's what she said. And then Jeff, that's $50 one time. And then he has, you can't call him every day, but what happens is he does follow up with you and you follow up with him. He actually gives a shit, which helps. Okay. 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 Here we go. Kyle, I agree. Okay. Oh, Brianna, that's awesome. Okay. They're right. Puts and calls are just different things. Okay. Let me go to Sensei. Wait, are you taking the 7 or the SIE? Yeah, one-on-one's great. And even if you don't want to work with me, I mean, you probably do, but I'm $250 an hour. I have Arseny and Mike are great tutors. Okay. They're great and they're cheaper. You can get like for 2 hours, you get what you get with me. It's fine either way. I mean, I'm the shit. But if you're taking the SIE, use that. If you're taking the 7 and you want to meet, that's fine. But the option classes, I mean, the membership, if you're taking the test in 9 days, you'll have a Sunday double class and a Tuesday. That you'll have 3 classes. So you have to make a decision. Is that worth it? Okay. Okay. Oh, Padfoot. Padfoot. That's from Harry Potter. Just throwing it out there. Okay. Boom. Okay, we're going to do the sobs and bliss. Don't worry about that. Okay. There you go. How we feeling, Michelle? We're ready for this, right? Century bonds. That one's at all. Let me get into this. Hold on.
Do they still do those?
I don't know. Those are 100-year bonds, right?
Yeah.
Yeah, I don't know. I mean, maybe, but I don't know. I'm going to get to the sobs and bliss. I promise. Okay, hold on. I promise.
I guess when they say you're not supposed to outlive your bonds, you're supposed to live off of them.
Yeah,
Century
that's
bonds
true.
would be,
Okay. Good, fair enough. Tony, I did do a little bit of it. I hope that helped a little bit. I know I didn't do everything, but I hope that helped a little bit. Okay. Okay. That's funny. That's what I said. Give it a little taste, and he keeps going. Okay. At some point, actually, I did tell D-Man I'm going to fly him out here. He's in Albany. I'm going to drive him out, whatever. I'm going to have him, once I get this thing set up, I'm going to have him set up the recording and the lighting. And
Oh, is that right?
Yeah. Maybe I'll have him come out and do yours too.
Michelle made a good comment about the classes.
Okay. Oh, yeah.
Because it's all repeatable.
Yeah, it is. 100%. I agree. 100%.
Classes, study program, whatever it may be.
Wow. Armed man arrested at U.S. Capitol with shotgun and tactical gear. Fun stuff. Okay. Now, okay. We don't talk about new shit here. Okay, here we go. Where is my slobs over bliss? Okay. So I have a video on that, but I'm going to talk about it. Okay. Oh, Alphabet did one? Oh, to pay for the AI? Let's see. Century bond. That's amazing. To sterling bond. A 100-year sterling bond is raising new fears. Okay.
That's a good question. You know,
it matures in 2026, so I can buy that. It's a $1 billion sterling denominated bond, so it's not in the U.S. Under a much larger currency debt sale of 20 to 30 billion. Interesting. Okay. Well, they lock in long-term financing at today's rates. What the fuck would it? What would the coupon on that fucker be? 100-year bond. They did. Catherine, way to be on that. Okay. Motorola did one in 97.
Huh.
A 6.125 interest rate.
It's not a bad one to have.
Yeah. Okay. Kyle, I think they're gone. I think the bearer bonds are maybe in the foreign countries, but not in the U.S. Okay.
I just checked it out. It said U.S. Treasury stopped issuing them in 82. Approximately 87 million in principal remained unredeemed.
Wow.
As of 2020.
Now, Brianna, this is the key. Hold on, not that one. This is the key. Hold on. Okay, I'm gonna do the So yeah, basically you find people to work together. Like the membership is fine. Look, I think it's great, but it's really how everyone gets together after the fact. Okay. Okay. Here we go. I'll do a little margin too. I'll do that a little bit, but let me get to the slobs over bliss real quick. Okay. Where somebody said, "Where are you, baby?" Are you before I do it? Are you still here, man? Stop. Who said it? I'm trying to find it. Here we go. Oh, Isha, yeah, you're definitely still here. Okay. So look, I did the video, but look, it's more about understanding it, right? So look, if I'm long stock at 50. So Aisha, if I'm long stock at 50, what do I want to happen? I want it to go up. So if it goes up, if I'm long stock at 50, couldn't I sell the stock? I say, listen, I want to sell it at 55. That's a sell limit. I place it above, right? So I'm saying, listen, I want to sell 100 shares at 55, not lower, at 55. That's where I want to sell it, at 55. I want to sell 100 shares at 55. I'm long at 50. I can make $5. Will I sell it at 54.99? No, I will sell it at 55. That's what I want to do. But here's the question, Aisha. I hope I'm saying your name right. If I'm not, let me know. But I'm just based on the phonetics. Now, I'm long at 50. I'm afraid it's going to go down. So I call you up and say, Aisha, do me a favor. If the stock gets down to 45, sell it for me. So you're going to place a sell 100 at 45, stop. Okay? That is the worst written 45 in the world, but it is what it is. Okay. I can never be on Blue's Clues. Okay, here we go. Now, sell 100 at 45, stop. That means as long as the stock is trading above 45, no one knows the order is there. But once the stock trades at 45, it will trigger and you will sell it at the next price. So think of it this way. I call you up and say, Aisha, do me a favor. If the stock gets to 45, sell it. So you can maybe not place that order. You can just watch it. And once it trades at 45, you sell it. Okay? But that's boring and that takes a while and you can make a mistake. See here, this does it for you. This is saying, as long as the stock's over 45, no one knows it's there. Once the stock trades one time at 45, it's going to sell at the next price, and you sell it at the next price no matter what. Hope that helps a little bit. Again, here's the one thing. The vendors love to ask really hard questions. Let me see if I can find it. I'll show you what the hell they ask, okay? Like, it's not hard. That's what she said. Hold on.
You're whistling the song, aren't you?
Yep. That's funny, isn't it? I didn't even know I was doing it.
You know what? It's been sticking in my head also.
I know. It's crazy. I am so fucked. Okay, here we go. Okay, now I got to fix this. Okay. So, Aisha, this is how they ask it, okay? A customer wants to buy, I hope you all can read it. It's pretty big. A customer wants to buy 100 shares of XYZ, but I want to pay more than $20 a share. The current inside market is 21.25 by 21.5. Which of the following orders should the register rep enter to accommodate the customer? Now, I look at this and go, okay, well, slobs over bliss. I want to buy stock, but I want to buy it below. So the only two that are below are buy limits and sell stops. There's not a sell, so it's a buy. Has to be a buy limit. So this is saying I want to buy 100 shares or whatever at 20. I will not pay 20.01. I will not pay 22. I will pay 20. So the answer has to be a buy limit. Okay, I'm just throwing that out there. Now, hold on. Let me unshare and go to a new one. You guys want to see that. You're going to meet with me. You're not going to see all those questions. Here we go. The next one is. Here we go. Okay, back to this. Okay. Now, the stock is currently trading at 40. The customer asks his registrar to sell his long position to protect. Remember, stops protect, limits don't. Stops protect, limits don't. So if you see the word protect, you know it's going to be a stop order. Since I'm long, it's going to be a sell stop. It's fine. So the stock's trading at 40. If it gets down to 35, just dump the shit. But they added a thing that I don't want to sell it below 35. You know, okay. Yeah, that works. So I don't want to sell it below 35. So I'm going to say sell 100 at 35, stop. But the problem if I just stop at that, once it trades at 35, I can sell it at the next price, which could be 32, 31, 30. So if I make it a sell stop limit, instead of becoming a market order, it becomes a limit order. Okay. It becomes a limit order. Okay. So now, so if I do a sell 100 trades at 35 stop limit, that means once it trades at 35, it triggers and I will sell it at 35 or higher. I will not sell it below 35. That's all it is. That's how the questions are. They're not, the vendors go fucking nuts with these questions. They really do. They go crazy. I don't know why. Okay. Here we go. Okay. Hope that helped a little bit. Again, the questions on the test are the questions on the vendors seem to be a lot harder. Okay. Okay. I'm glad it helped. Okay. I was figuring out myself. Okay. Yeah. So Brianna, so you got to join. If you come in on the membership ones, come in on Sunday night, and then we'll talk about getting you. Well, usually I bring it up during the class. Does anyone do a study group? And there's always people on here looking for study groups because they start one and it starts with 5 and then it whittles down. And whenever you start a group, you think, oh, I'm going to invite 20 people, 5 show up. So no matter what you do, if you can charge, I had one thing. I had a group that was really hardcore. There was like 9 of them that met every other day and they were good. But anytime they're trying to bring someone else in, they would show up once and then not show up or show up. They were flaking. So you got to try to find a good group, but assume you always want to over invite into your club because 25% will show up. But again, go on the Facebook group, type in, I'm starting a group. Does anyone, don't say, are there any groups out there? Say, I'm starting a group. Does anyone want to join? You'll get 30 people answer. You might even say, hey, we're in a group, join ours, whatever. So anyone who's in the group and sees those posts of somebody trying to group, invite them into your group. I promise it'll help. We're all about being a community, helping each other out. And that's the magic of this Facebook group. It's not about, yeah, I celebrate people who pass. That's fine. But it's really about the people who struggle or the people who are worrying about, they're worrying about, am I ready? Stuff like that. I mean, literally on the Reddit, it's like the number one question is, am I ready? Okay. That's why I do videos. I have an Am I Ready video where I just go, I ask open-ended questions. If you can answer most of them, you're ready. Okay. I think we hit it, man. Okay. Again, I know that the quizzes are tough. If you do my brutal exams and you feel good, you should feel fine. The vendors are trying to trick you. That's the problem. Like some people do really well on mine, bad on the vendors, but they kill the test. Because I think the vendors are sometimes kind of crazy. Okay. I think we did a good job. I think we got a lot out of it. Welcome back, Jeff. We missed you. Okay. Oh, Michelle, there you go. Is that a brag? You're just showing off that you have a just showing off? Fine. Okay. But if you need more people, invite them in. I know that you have a nice little core, but you always want to invite people in. It's good. It's good karma. Always think about that. You want to lay good shit out there because a lot of times it comes back. I mean, I was a dick for a while, so maybe it doesn't always come back because I'm doing okay, but who knows? Maybe I'd be bigger if it wasn't. Okay. Everyone, don't forget, if you need tutoring, I'm here at Series7exam.org. Plus, I have tutors. Jeff can help you out. If you want another one, Michael Weiss can help you out. It's at Series7examtutor.com. It's great stuff. Join the Facebook group. Don't forget, I have Instagram and Twitter, all under Series 7 Whisper. I had that since like the mid-aughts, in the 2018, 2019. I put other stuff on there a little bit. Like I have a little more shorter videos on there. And let's go on it, baby. Okay. Yeah, usually they're Zoom. Like the ones I do are Zoom. They're not. Look, I understand this platform. This is fun. This is more just a shit show. I do this because I like it. Okay. The actual classes they pay for are Zooms. Okay. They're absolute Zooms. They are on Sundays. We have a Zoom and I record it. I have AI, which is amazing, record it, and it gives it all this stuff. Yeah. And it's so the Series 7 is 6 p.m., 7 p.m. on Sundays, and then 7 p.m. on Tuesdays, plus all the videos. The SIE is Wednesday nights at 7. I don't run it, but there's Michael does it, and I promise I'll do Zoom tomorrow. You won't have to deal with Google Meet. Okay. I think we're in good shape. We did some damage, people. Okay. And good. Hey, Kyle, I love seeing you. I like to see on X now. That's good. Okay. I have to be very careful with X. And I'm on X too. Okay. Okay. Oh, hold on. Hold on. I got it. Oh, wait, do I have that on here? I have to repost it. Let me see if I have it in here. I don't have that one. I have wait, do I? I will make sure I have it for next week, okay? Because I don't have it in here. I just have this. I have where is she? Where's my savage girl? I have this one. I know, Demon, that's not the one. Oh, it's back for you. Okay. I will put the other one out there. I have a good one where she raps. It's great. I don't know how they do it. It's so fucking amazing. I'll get that up I have an open spot and I'll put it in there.
I'm gonna take the test like a savage, pencil in my teeth and a fire in my eyes. Yeah, I'm gonna take the test like a savage. Don't need no love, got my brain on overdrive. Gonna rock that page.
Anyway, I'm out of here. Everyone, I will see you guys later. And I will see you guys in 1 week minus an hour. And hopefully some of you will see you on Sunday night. Okay, everyone, I am out of here. Okay. Oh, hold on. Bubbly? Yes. So mine, yes. If you join the membership, it's $24 a month. And we meet on Sundays at 5 p.m. Yes, absolutely. There is this. And don't forget, we do our NASA stuff is Thursday night. So all our NASA stuff is Thursday. Okay, everyone? I will onward and upward.